June 30th, and this is the London Review. Hi guys, Robert Rivera here with the Rivera Trading Group in association with Trading Academy. And we have a beautiful trade last night on gold on a setup that I sent out to the team. They did very well with it. And I find it instructional because one of my students called me or contacted me just as gold was making a move to the upside on the 30-minute chart on a critical spot. And I saw a pattern that I thought, you know what, if this happens, I told him, if this happens, I'm going in, okay? And I'm thinking that maybe that will help you understand a little bit of how gold moves and also how to take these setups. So let's go straight to it. So this is the setup as I had it last night when I sent it to the team. If you notice, we have a nice wedge going on here on gold. It's been dropping. It's been touching that trend line as it's been coming down, and from the bottom up, we also have it, and it just meets here at the perfect place. As I mentioned in several videos before. There's a lot of details here that go on for the team, but for the YouTube family and for the Instagram family, this is probably good enough to show you what I mean by what was happening with gold last night. So let's move this forward so you can get some idea of the action. First of all, we see how price has been going up. It's running into a golden zone. For those of you who don't know what the golden zone is the 50 and 61.8% of the Fibonacci retracement, and it is where price is likely to retrace after it has made a move. So in this case, we had this drop, the strong drop to the bottom. It is making its retracement. Where is it likely to stop? It's likely to stop at the golden zone. Okay, sometimes it is referred as the 50 percentile, or but I like to include the entire golden zone because the 61.8 is a place where it often goes to also, and it usually rejects there. So let's see, let's move this forward to see what happened. Okay, so it starts making a push into the golden zone, and then it rejects. That might have been a good place for an entry. For those of you who are skilled at this and been doing it for a while, this could have been a good place of entry. But I prefer to get a little more confirmation since, again, the whole purpose of the wedge is to see if it breaks the wedge, right? So here it comes, it's coming down. This is the 30-minute, and I see this action right here, right? And then the next candle, the very next candle makes a move to the upside. I'm not sure if we're going to see it here. Let's go. Okay, so before it dropped, let me go ahead and open this a little bit bigger. Okay, before it dropped, it pushed up, and it was green all the way up here. And it just so happened that one of my students was communicating with me, and I told him, if this candle turns red, and breaking the bottom of the previous one, I'm going in. Okay, first of all, we have the confluence there of it breaking the wedge, and also the pattern itself, having created a level of support. If I go to the 15-minute chart, for example, let's go to the 15-minute. Let's see if we can do this quickly. There it is, okay? There is support right there. It stopped, okay? Then it turned green and it went up only to reject at the 50. That would have been another pointer there for those of you who were interested in following the 50 moving average, all right? And then it starts pushing back down, okay? And I told them if it pushes down below the previous close of this 30-minute candle, I'm going in. And so that's what we did. And when I'm taking it to the bottom of the zone, that was like 16 pips for me, and boom, it did that immediately, okay? The very next candle, it did it, boom. I mean, that was quick and out. That went on to drop for a little more, I believe. Let me see. Okay, before it starts reversing. So before it starts coming back out, which creates another support here, okay? And for those of you who are looking to take a sell, you could have perhaps taken it below that. But again, the pattern here now starts telling me that it's trying to reverse back inside. But in the meantime, from the break of the wedge to where it stopped coming down, that's a 51 pips. Let's say 51 pips, okay? I just simply took 16 or something like that. The team did pretty good. Some of them did better than I, and I'm happy for them. But what I wanted to show you, again, was price action and price movement, especially on gold. Anytime you see a pattern like this, like, for example, you see another one over here where gold stopped right there and creates resistance, okay? The moment that this creates resistance, this is on 30-minute. On the 15-minute, you might be able to catch this coming down. Here it comes back up, stops at the same spot, okay? creates resistance. You can catch that on the way down. Here it creates support, okay, and it confirmed by the next candle. You can take it to the way up, okay. Here it creates resistance, okay. I mean support again, and when it comes back down, if it breaks that, you can take it to the downside. Again, these are all scalping maneuvers, right? This is not for long-term moves. But on gold, for example, on a short move like that, again, just like this one, on a short move like that, you can take 30, 40 pips easy, 50 pips perhaps, or even more if it keeps going in your direction. But again, I'm talking to scalpers. I hope this helps you guys.
Here we have some of the comments from the team, and I love the fact that the team is learning so much. I mean, they're setting up their own setups now. They are tweaking my own setups that I'm sending out, making them even better. I didn't even pick up on the fact that there was another golden zone at the bottom, which they went ahead and placed on their own. They figured that out on themselves, and that's exactly where it bounced from on the way back up. So that was beautiful. That was Keith. This is Brian. He did pretty good. I think he said he shared also one of his charts there, which I omitted, obviously. And then there's Imani also, who's been doing awesome, awesome work. I appreciate the fact that our students are really studying the material and applying it. Obviously, until you apply it, then there's no real learning, correct? And then these are my results from last night. Just a quick 16 pips or something like that. That's all I was looking for. You know, gold tends to bounce from wherever it goes pretty quickly. It retraces pretty fast and even reverses pretty quickly. So taking profits quick is a smart idea. And that's what we did.
Welcome back. I'm keeping this video nice and short, but I thought it was instructional in seeing how price moves. And since the team, I know our team was watching this last night, they know the movement that I'm speaking about. For those of you who trade gold, you also saw this move, okay? Well, you can count on this especially, okay, as is nearing the London Open or at the London Open, you're going to see these kind of moves, okay? And you can take advantage of it as it is nearing a zone or as it's breaking structure. You may be able to catch a quick 30, 40 pips, like really fast, and being able to cut your night short, because most of the time, if we don't catch that, it starts consolidating and it may be another 2, 3 hours before we see another move like that. Okay. So taking advantage of these short moves that are predictable because they happen over and over again, especially with gold. GBP USD also does similar action just like that. We may be able to cut a night short, take our profits, and go to bed, which is what I recommend for everybody. Once you make your money, get out, go to bed, come fight another day, because the market will take your money if you stay in there long enough. Again, this is Robert Rivera with the Rivera Trading Group in association with Train Trading Academy. I hope you're finding value in what I'm sharing with you. And if so, please like, comment, and subscribe. God bless you.